Let me introduce our keynote speaker, Luke Chandler, who's the chief economist at John Deere. I had a chance to chat with Luke just a moment ago. Think of this, though, 130 different countries operating either in or trading with, 37 billion in revenue, annual revenue, over 70,000 employees, and think of all the trade events and changes and policy matters that are going on. It must be an incredibly challenging and fascinating job, and we're looking forward to hearing from Luke in a moment. Luke previously spent, before going to Deere Company, spent roughly a decade at Rabobank, one of the big industrial banks in Australia. You see them all over if you go to Australia. He was general manager for food and agriculture research there. He was global head for agricultural commodity research there, worked for National Australia Bank in a similar position before Rabobank. So with that, Luke, we're delighted to have you kick off the conference and look forward to your remarks.
Thanks, Matt. Good evening, everyone. My microphone? Okay, good evening, everyone. Thank you for the kind introduction, Matt, and for Brad for the invitation to be here. I'd like to say that as a result of the stress with this job is why I've got the hair that I do, but that happened long before I took this position. All right, so I'm going to talk for about 20 minutes on global agriculture, production, trade, and really set the stage for our panel who are going to join us afterwards. So we've got about 20 minutes and then around about 10 minutes for any questions that you might have for me before we switch over. So with that, I'll get into it. Just a quick disclaimer that all of the information shown here is publicly available and not pertaining to Deere's future earnings. So maybe just a quick story before we get into the presentation. And my team and I recently participated in what we call at Deere a day of caring, where we go out into the community and do some volunteer work. And we were fortunate enough to go to a local creche. And our job was to clean the walls and to paint the creche. And which was obviously filled for 3 and 4-year-olds. And before we could do that, we had to take everything off the wall. And these behaviour cards were on the wall. And as a father of an 8-year-old, a 6-year-old, and a 2-year-old, I wish we had more of these behaviours demonstrated at home. But so there are examples like play together, share, please say stop, these sorts of things. And I thought the one in the middle was pretty interesting given the conversation we've got today, and that was trade. So not comparing our politicians to 3 and 4-year-olds, but clearly we learn the benefits of trade from a very young age. So we're going to talk a little bit about that today. So this first slide that I've got is just to talk about the growth in production in agriculture, and I'm talking about grains and oilseeds here today, but this is reflective of almost every agricultural commodity that you see around the world. So on the left-hand side is the increase in production, and you can see on the right-hand side between 2000 and 2019, so almost 2 decades, we added about 1 billion metric tons of production around the world. But I think the thing I really want to highlight here is just where that increase in growth has taken place. So you can see in 2000, and hopefully you can see that better than I can on the slide, but this is South America here, and this is the Black Sea region here. And then you fast forward 19 years in terms of growth of production, and you can see where the growth has taken place over that period. Maybe the other one to highlight is just the size of that pie in Asia, and obviously reflecting the significant production that we see in places like India and China. But given that doesn't come onto the world market so much, I'm going to focus on these other areas where we've seen such a rapid growth in production and also exports. So over that period, we've seen the emergence of the Black Sea region and the increase in production, and Russia now becoming the largest wheat exporter in the world. And you can see the grey line at the top here reflecting the Black Sea region, which is what we've aggregated as Russia, Ukraine, and Kazakhstan. And also the reduced relevance of US exports, or US reduced market share of US exports on that world stage. So 2000, US still represented around 30% of global wheat trade. Over that time frame, those exports have halved. And obviously this year we've seen plantings of wheat in the US fall to their lowest levels on record. And so some of that being driven by the increasing production in these low-cost producing regions around the world, such as the Black Sea region, which has really become the lowest cost exporter on the world stage. If we look at soybeans, and we've seen a similar type of evolution in terms of production and exports. So this chart just shows you the increase in area that we've seen dedicated to soybeans in Brazil, and you can kind of fast forward through the growth here over about an 8-year period. We've seen around 30 million acres of additional area planted to soybeans in that 8 years. That's about a third of what the US plants to soybeans every year has been added in just an 8-year period. And you can see in Mato Grosso, the largest producing state, that area growth has grown by around 57%. And if you look at some of the forecasts, we've used IHS here, but other publicly available forecasts show an expectation we'll see another 9 or so million acres added over the next 5 or so years. And so this increase in production, increase in exports, and increase in competition is expected to continue. And I think one thing also to add here is you look at where that growth over the next 5 years is expected to take place. It's not just in Mato Grosso, but increasingly in Mato Piba, these conglomeration of these states up in the northern arc. And the primary driver for that has been increasing investment. And if you look at transportation costs, historically have been a real competitive advantage for US producers and US exports onto the world market. You can see here the comparison, and these are USDA numbers, the comparison of what it costs to get soybeans from Mato Grosso down to the Paraná port relative to, say, the Corn Belt to the Gulf. So US has beans have a significant advantage on the world market. What we are seeing, though, is an increasing investment in new ports, in new railway, in new bridges, in new barge facilities up in that northern arc, which represents around a 40% cost advantage relative to bringing it by road down to the southern ports. So 40% reduction in that cost to get it to the port is obviously going to mean more competition on the world market, and why we're seeing such investment in that producing region up in that northern arc. So why have we seen some of this taking place? And certainly the increased competitiveness has, to a large degree, the currency has played a really strong role here. So we've been in a really strong US dollar environment. And that's kind of a good news, bad news scenario. So good news is we're in a strong dollar environment because the US economy is the strongest in the world. We've got, in July, the US economy will it'll enter the largest expansionary period in economic history. We've obviously got a really strong labour market with unemployment below 4%. We've got still strong consumer confidence. And so relative to other economies in the world, growth and GDP in the US remains very strong, and hence why we've got stronger interest rates relative to other economies around the world, and why we've got a stronger currency here as well. So relative to traditional grain exporting competitors such as Australia, Canada, Europe, we've seen the stronger dollar representing a depreciation in these other currencies, and certainly relative to some of these emerging grain baskets, such as the Brazilian real, Mexico, Argentina. We've seen a really strong depreciation in those domestic currencies relative to the dollar, which has really played a big part in this expansion and also the increased profitability and the increased competitiveness of these countries. So it's not just logistics, but it's certainly the currency has been a contributor here. And so if you take that soybean scenario, we saw the expansion in Brazilian production, and we've seen Brazil a couple of years ago take over as the largest soybean exporter in the world from the US. And certainly with the trade war over the last 12 to 18 months has certainly accelerated that role as the world's largest soybean exporter. And I think one thing worth highlighting is, given that expansion in production and exports of soybeans around the world, if you look at the demand side of the scenario, a lot of that expansion in both US acres but also South American acres to beans has been obviously been driven by China. The expanding Chinese economy, the increasing middle class, protein demand, all the story we know very well. And this chart on the left shows you that rapid expansion in soybean imports. But the thing I wanted to highlight is just this plateauing that we've seen in soybean import demand over the last year or two, which is potentially a risk if we continue to see greater production and exports in other parts of the world. So we're going to be fighting for what is a plateauing kind of market pie, if you like. So a few drivers for that: some deceleration in the Chinese economy, risks of a hard landing given the ballooning debt we see in China. We've obviously also seen increasing concerns about Chinese GDP growth given the trade war, and is that having an impact? We saw some pretty weak industrial numbers coming out of China in the last week or so. And then the other contributing factor to this plateauing demand has been the outbreaks of African swine fever, which are shown on this right-hand side of this slide here with over 100 outbreaks. There's been over 130 million pigs culled in China as an attempt to try and contain the spread of this disease. You know, to put that in perspective, that's more than the amount of pigs we have in the US totally. So it is a huge deal. We've started to see this also spread to surrounding countries. We've had outbreaks in places like Vietnam. But I think that the thing to highlight is just, if we do see that reduced demand for soybeans and soybean meal, which is primarily being imported to feed the hogs, then that could also lead to a contraction in overall soybean demand and increase that competition moving forward. So, and so we've seen this develop in wheat over a few decades. We've seen this increasing production and competitive environment happen in soybeans, and then we're also starting to see it in corn a little bit as well. And so, you know, it's interesting just to kind of look at the chart on the left-hand side, and that shows you particularly the yellow part of that bar, which is the second crop, or the safrinha corn crop in Brazil. So where they're double cropping corn, and you can see how rapidly that corn crop has expanded. A CAGR of around almost 14% over the last couple of decades. So this has grown really significantly. It is also coming onto the market during what was the traditional US export window. So greater competition for US corn exports on the world stage. Granted, some of it is in Mato Grosso, so it does have that cost to get it to port, and so we've seen some investment in domestic corn ethanol and those sorts of things, but certainly we are seeing greater Brazilian exports, and we're actually even seeing, you know, Brazilian corn exports into the east coast of the US because they can land it there cheaper than what you can getting it from the Midwest across to the east coast. So, and then on the right-hand side, we've got the similar chart showing export share from major exporters around the world. US has certainly still remained the largest exporter, but obviously we're going through some production issues here in the US at the moment with plantings running at a record low pace or slow pace, given the rainfall that we've seen and the flooding we've seen across the Midwest. Having driven from Iowa across here today, it was great to see a little more drier conditions and plenty of green machinery out in the paddocks. But so hopefully farmers can get out and catch up. But certainly, it's a potential scenario, depending on what eventually happens with production here in the US this year, that Brazil becomes the largest corn exporter in the world as well. So again, just trying to paint that picture that it's an increasingly competitive environment. And so I guess that brings us to what our panel is going to talk about in terms of trade. This chart just shows you some of the countries that we're currently, the US is currently negotiating with. So if you think under the Trump administration, one of the first things that was done was to withdraw from the TPP, which US agriculture and certainly John Deere were very supportive of the TPP and the opportunities that it provided for US agriculture. We now have NAFTA 2.0 or the USMCA, maybe even more in doubt given last week's announcement around tariffs on Mexico, which may come into effect over the next week. We've seen some progress in South Korea. We've got ongoing uncertainties with the EU. Had President Bolsonaro in Washington recently from Brazil. Ongoing uncertainties around Japan. And, at the moment we have a situation where beef exports from countries like New Zealand and Australia have a significant tariff advantage into one of the world's largest beef importers in Japan. And so getting a trade deal there where US exporters have a level playing field is going to be important. And then obviously the big one being what happens with China, which is important given it's the world's second largest economy, world's most populous country, but it's also the world's largest importer of food and agricultural commodities. So this isn't just a soybean story, this is important for all producers here in the US. So, and I think that uncertainty that we see is reflected in some deteriorating confidence that we see in the US ag economy. So this is the confidence indicator released by Purdue University and the CME group, was just updated and released today, and shows you that you can see there just how significant the fall has been in confidence. No doubt some of that reflected by the weather conditions, but also the ongoing trade uncertainty. And interestingly, this is when President Trump took office. And so you can see they reached an all-time high just after he took office, and has now reached a low under his tenure. So hopefully, I guess the thing to kind of finish on here is that hopefully we see that turn around, and the one thing of hope we have here is that with all those countries we just showed where there are ongoing trade negotiations and balls in the air, if you like, represent around 65 or 60% of US agricultural exports. So there is a large pie of US agricultural exports represented by these ongoing trade negotiations, and just why, I think hopefully we hear from the panel coming up next around why it is so important and why the Farm Foundation has been so proactive in trying to push the importance of trade for the US agricultural sector. And obviously, hopefully, we see some further progress and some resolutions on some of those ongoing negotiations moving forward. So with that, I'll wrap up. I don't know how it went for time, but I'm happy to answer any questions that you might have. Thank you.
So there's microphones.
Hopefully everyone's got a drink, so don't be shy.
Luke, you had mentioned the investment that's being made in Brazil in regards to ports, highways, infrastructure in general. Question is, who's providing the financial support for those? Is that within Brazil, or is that coming from foreign investment?
So it's a really good question, and I think it's fair to say that over time, the actual investments have been far below the projections in terms of investment in infrastructure. It is still progressing, but a lot slower than what the Brazilian government had initially kind of forecast, if you like. There have been monetary challenges. We are hearing greater involvement from the Chinese, which has accelerated given the trade war. We're hearing greater partnerships, greater supply agreements, joint venture agreements. Potentially there's one major highway there that isn't finalised, but I know there's kind of discussions around the Chinese may come in and partially fund that. That's, they're certainly obviously the big player that everyone sort of looks at. And then I guess we've got a relatively new president there in Bolsonaro, so we're also waiting to see kind of how he looks at some of those big ticket items and what happens. So, but clearly, private companies are also making their own investments without the government. So in some of the major rivers, and we're seeing large inland ports being built and barge facilities and those sorts of things, trying to accelerate the way of getting their grain to the port. So.
Question over here.
Yeah.
I think that since the early 80s, our trade with Brazil our soybean exports to China have been static, and I think South America has pretty much absorbed all of the increase. What does the United States need to do to be more competitive in that market, or are we using it ourselves, and so we're making it less competitive that way?
In soybeans or corn? Yeah, I mean, I think US have certainly captured some of that market share into China. Depends when you kind of look at the data. Certainly, since the trade war, we have seen trade flows recalibrate a little bit, if you like, where Brazil's taken a larger chunk of Chinese demand, and US exports have moved to the EU, Middle East, other parts of Southeast Asia. So that's certainly one way. If we do see, with this African swine fever, there is some thought that if we do see greater protein exports from the US, you feed the animals here and then export the protein, which might also accelerate. So, I think that a large portion of US beans are exported. So it's about making sure you got open market access. You can compete competitively on the world environment. And that's where, there's increasing challenges.
Luke, hey, thank you for a great presentation. So a question, during the transition into the new administration, one of the arguments that was made is that China was sitting on top of significant reserves from a grain perspective, and therefore that was a threat to the U.S. ag economy. Do you have any insight on if that's changed or what's occurred?
So they did build up their grain imports, particularly of corn, quite dramatically over a kind of a 2 to 3 year period. You could fly across China, and every village, was yellow all around the village. And the reason that happened, without going into too much detail, is they were trying to stop urbanisation or slow urbanisation. We had incomes in the cities were around 3 times what they were in the rural areas. So they were providing a minimum price for farmers to produce corn to try and boost rural incomes, so people would be incentivised to stay in rural areas and not move to the city chasing higher paid jobs and those sorts of things. And so they implemented this minimum price for corn. World market fell down here. And so if you're a consumer of corn, a feedlot or something like that in China, you started importing other grains or DDGs or these sorts of things rather than using domestic corn, which was, 2 or 3 times the world price. So it was really primarily driven by policy. Now there's talk that they may implement an ethanol mandate. There's other policies that they're trying to do to drive the rural economy in China. But I guess I don't know sort of what else to add there. I mean, I don't think there's anything kind of strategic in terms of how they were looking at the US or anything like that. It was more domestic policy. Now, they certainly, in terms of self-sufficiency, have also taken some decisions around focusing on key grains such as rice, wheat and corn, and certainly made a decision to import soybeans from the world market, and that may or may not change depending on what happens with the ongoing trade discussion. Yeah.
Thank you. Thanks for the great insight you provided us with. I'm curious, you didn't say much about Africa, and while I realize the continent is still very much an emerging marketplace,
Yep.
I'm curious how you see Africa factoring into some of these current agricultural trade conversations.
Mm-hmm. Look, really good question, and I think certainly, I've tried to focus on the current issues that we have. When you look sort of longer term and global population growth, I think to 2050, 97% of the population growth is going to take place outside of the US. And so increasingly the demand is going to come from Africa, from Southeast Asia, from India. And so making sure we have, and that's why, again, why trade is so important, because increasingly, I think around 1 to 3 acres that are planted in the US at the moment currently go overseas, but that you would expect that ratio to increase over time given the large population growth changes that are going to take place. So I don't necessarily think Africa is going to move the needle in the next few years, but certainly the longer term projections are that population growth and economic growth will accelerate in some of those regions, and obviously whether they can meet their own needs domestically through increased mechanization or whether they need to rely on trade is going to be no one really knows how that's going to play out at the moment. But but I would think China has obviously been the major driver over the last sort of decade or so. Increasingly we see greater and greater demand from other areas in Southeast Asia. Indonesia's the 4th most populous country in the world, and it's an archipelago, so increasing challenges in terms of meeting their own food needs domestically. So there's certainly more opportunities in the shorter term than what you'd look at for Africa. Yeah.
Great presentation, Luke.
Thank you.
What's your short-term and long-term outlook for farm equipment sales in North America?
I mean, shorter term, obviously, it's a moving target at the moment, really, given the flooding issues. If you look at kind of what the USDA came out with in their most recent WASDE, which showed, I'm going off the top of my head here, Galia, but they were essentially projecting corn carry-out above 2 billion bushels, soybean carry-out above 1 billion bushels, and wheat pretty close to 1 billion, and commodity prices all coming down. So, and that obviously has a big impact on farm income, so, and hence equipment demand. So, that certainly was painting a negative scenario for the outlook for this year and the year ahead. This kind of current weather issue is maybe resetting the balance sheets. Obviously, we're taking somewhere between 2 and 4 billion bushels of corn production out of the equation this year, and then you've added, and then in that time we've added the MFP payments of around what we think might be about 16 or 14 to 16 billion have been announced, although there's a lot of uncertainty even over those in terms of whether tranche 2 and tranche 3 will get paid and that sort of thing. So, shorter term, I think it's fair to say it's reflective in that ag barometer of confidence indicator is that there's a lot of uncertainty in the agricultural economy in North America, and likewise in Canada, where they're also suffering lockouts of commodity exports into China, such as canola, etc. So There's a lot of uncertainty in the shorter term. Longer term, I think things such as productivity enhancements are going to be really important. Replacement demand is still a longer term driver. And we've seen certainly farmers wanting to make an investment in technology because they see that as a way of reducing their costs and increasing productivity and as a way of competing with some of these lower cost exporters around the world, such as Brazil, Russia, etc. So, I think we're confident longer term that the long-term tailwinds that we talk about in agriculture, such as population growth, increasing protein consumption around the world, is still going to drive the longer-term cycle, but shorter term, there's certainly a lot of uncertainty. So I hope that answers your question.
Well, please join me in thanking Luke Chandler.
Thank you.